Okay, folks, welcome to Thursday. This is our regular support and resistance show. I'm Paul.
I'm Brian.
And of course,
Bobby.
as you can only imagine, no Bobby once again. But he's going to come. He promised us he was going to show up. He'll show up a little bit later. So we'll wait on him. No, just again, so for those of you who are watching the show, just know that we're here to bring you fundamental and technical analysis of the crypto market so that you can become a crypto insider. Each week, myself, Brian, and of course, when Bobby's here, we'll discuss the latest news and talk the charts, giving you thoughts on our opinions on where we support and where we resist what's being discussed. Sometimes we'll all agree and sometimes we won't. But at the end of the day, we're all friends. So we're just having fun just so that you can be in the know in the world of crypto. So, hey, Brian, how's it going, man?
Hey, everything's going well on my end. Pretty busy at work today. I'm in the energy world. And if you follow the crude market, big old dumper today.
Really?
Down 5 or 6% down today. Nice little move in crude. It has all to do with Trump and the trade issues and everything like that. Kind of hitting oil, hitting the stock market, those kind of things. So I was a little crazy at work today, but that's the way it goes. So let's just get a little bit more crazy in the crypto world.
That's right. It's gonna be crazy. So let me ask you this question though, since you brought that up. Is the oil stuff have to do with any of this tariff stuff going on? Or is that totally separate?
I think it has a little bit to do with it. Yeah.
Okay.
Yeah. It's especially the stock market. If you looked at the dollar market today, I mean, the dollar went up and did a U-turn at the high and started to come down. So I think crude, the dollar, the stock market, all of it's being affected with a lot of these China trade talks.
Gotcha. Wow. Too crazy. Well, I tell you what.
With a lot of these China trade talks.
Talking about stuff that is in fact crazy. One of the things that is crazy is this whole Craig Wright, Satoshi Nakamoto thing. Have you been keeping up with this?
Oh, absolutely. You mean fake Toshi?
Be careful there, Brian. You're gonna get yourself.
I know. Just in case he is, I can't make fun of him too much, right?
That's right. Well, so there's been this back and forth in this situation with Craig Wright and the Copyright Office and what's been going on. And so it started out with an article that came out, I think it was from CoinGeek, that basically said that he got the copyright for Bitcoin white paper and the Bitcoin code. And of course, when that hit Twitter, crap hit the fan. People came out of the woodworks screaming about that. And then it had to get cleared up by CoinDesk that says, no, time out, wait a minute. That's not the case at all. So, and then an article came out today that said, no, actually the article came out yesterday, says, no, we don't recognize Craig Wright as being Satoshi at all. So it's going to be interesting to see where this thing actually goes.
Yeah, for sure. I mean, I know we've talked about it over the last couple of days, and one of the things that I brought up was I don't understand why anyone would want them to know who Satoshi is at all. I mean, I think that's one of the most genius things about the whole Bitcoin white paper is it came out anonymous. Or in other words, Satoshi was the person that started it. He, she, they, who knows what. But I wouldn't want that at all. But I mean, to me, it's genius. The government has no one to go to get on top of for any type of regulation or anybody to sue them or anything like that. And I wouldn't want you put me in that role. I mean, I would not want that at all. Keep me away from that.
Yeah, no way.
Let it run.
Why would anyone want to do that in the first place? I mean, listen, whoever Satoshi is, whenever the day comes that person gets revealed, can you imagine what's going to happen? I mean, one, the person has a boatload of cash, so that's a statement in of itself. But in addition to that, if the governments were going to be up in arms about Bitcoin and the code and the protocol and everything, they got a person to go target and take down. So I don't think that person's ever coming out of hiding.
It makes no sense to me on why they would. I mean, if they would have probably already kind of cashed in a little bit when it was at a $20,000 high. And they own what's the Genesis block? Like a million Bitcoin, something like that. I can't remember what it was.
I think it makes a lot more than that.
Yeah, I can't remember exactly, but it's a lot of money. Put it that way.
Right. Yeah, so the point is that this whole thing, and I don't think we've heard the end of it. I know Rand Neuner from Crypto Trader on CNBC, he came out and said there is some ramifications to this. Actually, I'm going to see if I can find his tweet, because it was actually a really good tweet, what he said. Yeah. I didn't happen to follow the entire thread because these conversations can get crazy, but he did make a statement about it. He says, I think, this was on May 21st, he says, I think the crypto world is grossly underestimating the implications of the latest move by Craig Wright. If he is awarded the copyright for the code and white paper, he could stop people from using it without agreement. This is a scary thought.
Yeah. I mean, it's a big if that happens, but yeah, that would be very bad.
Yeah.
I mean, forget all this copyright bullshit. Just go straight up. If you have the Genesis block wallet address, just send a Bitcoin out of it. Just send something. Prove it.
You can't.
I mean, it doesn't have to be much. Even send 0.1. It doesn't matter. Just send something out of that wallet so we know that you exist.
Exactly.
And then show us why you do it.
Right. Just send us Satoshi.
It's not that hard. So you can forget all of this legal mumbo jumbo and all this other stuff. Just prove it. Then you can copyright it all you want.
This is true. True. And so, as a matter of fact, in that article from CoinDesk, this is what it said. It said, as a general rule, when the Copyright Office receives an application for registration, the claimant certifies as to the truth of the statement made in the submitted materials. The Copyright Office does not investigate the truth of any statement made. The Copyright Office wrote in a press release. So it says, in a case in which a work is registered under a pseudonym, the Copyright Office does not investigate whether there is a provable connection between the claimant and the synonymous author. So that's interesting too, the fact that they said it that way, that like they don't prove anything, they don't verify it, they don't investigate it. That's weird.
Well, maybe I should put in an application that I'm actually Craig Wright's son.
You go. I don't want that title.
Well, if he's Satoshi, then I'll go that route.
Right. If you're Satoshi, then I'm your son. Too crazy.
Oh, just hogwash, man. It's just crazy.
It
crazy,
really
crazy.
Nonsense.
Narcissism. Look it up in the dictionary. There's a picture of Craig Wright.
Yes, indeed. It really is. I think it is. It's him sitting there just smiling. That's Craig Wright. Narcissist.
Awesome.
Well, hey, listen, we are going to have a guest on, folks. We really are. It's going to be iTrustCapital. They're going to be joining us a little bit later. We're going to talk about some other news before we get to them and pull them in. And hopefully by that time, our good friend Bobby will have arrived. But yeah, so we'll do that. We'll bring them on. We'll ask them some questions. We'll talk about the market a little bit more. And then we'll dive right into some of the technical analysis, let you guys know what we think, where the market is, where the market's headed, and what could possibly be coming up. So with that, hey, let's start talking about some of these articles that we pulled up.
Yeah, I got one here. Let me share my screen. All right, I'm going to start out with. Can you see it there, Paul?
Yes, indeed.
All right, cool. I just want to. I think it's on you. Nope, it's on me. All right, gotcha. I got too many screens in front of me here. All right. I'm going with this article. The Bitcoin halvening is now precisely 12 months away. Couple of things. We just had the Pizza Day, right? So next year, around this time, we're going to have Pizza Day and the halvening coming up around the same time. So I thought that was kind of cool. But one of the things I really wanted to talk about was, well, if I scroll down here in the article, right, the second paragraph right before the end, you could have a countdown, fireworks, music, pizza, an overall party. So I'm actually thinking we should throw a freaking party next year in May. I think we should totally do that.
Hey, I'm game.
Hey, a happening party. I don't care where it's at. We're going to throw one somewhere. So that was part of the article I like. Another thing is, since we're talking about the halvening, one thing I saw, I pulled this chart up. I think it was in your, you put it in your your brief.
Yeah.
It's one of them I've been kind of seeing people talk about. I even did a show or a chart the other day to put some internals on it. But one of the things that I saw today, it was from Altcoin Daily, those guys that run their YouTube show.
Great show, by the way.
Yeah, it was an awesome episode. I highly say everyone go out there and watch it, because it really had to do with the accumulation phases that we're going through. And right now, both of these accumulation phases that we're in, and especially this one in 2019, as we're starting to get the bull run, they were talking about, all these big banks and institutions and everything behind the scenes have been or most likely buying this stuff up and accumulating it in these accumulation phases. Most likely they might have done it all the way through 18 as it was dropping down, because then they're coming out going, and you have to watch their video. They do a great job to show of all the media coming out going, oh, Bitcoin's terrible, this, that, all of these other things. But in the meantime, behind the scenes, I have a feeling there's an accumulation going on. Then you hear the article that came out today with AT&T. You can pay your phone bill, with Bitcoin. I don't know anybody that would really want to do this right now because of the tax implications, because it's still you pay something, you got to pay your capital gains on it. Once that changes, I think that would be different. But here AT&T's coming out. Hello, they're either going straight to cash or they're accumulating and creating a position. So I brought this article up mainly just because I lost my where's my article? There we go. I really brought this article up, support and resist. I absolutely support the halvening coming up, and it's because it's code. It's code, people. You can't do anything about it, right? It's all code. We know when it's going to happen, and the best thing about it is when it halves, supply goes down, and that's a good thing if you're holding it for longer term. So I'm all for halvening. I'm all for the halvening party that we're going to have in May, and go watch the YouTube on Altcoin Daily, because they really have a good way of explaining the accumulation that's going on. So
that's right.
That's what I had going on here, and I'm having slight problems getting to my computer here. There we go. We go.
So on the back of that, I'm going to share something on the screen, and I think folks need to pay attention to this. Now, we got Bitcoin halving, but that's not until next year. We've got another halving coming up, and it's Litecoin, and there's the countdown. It's in 74 days. I'm wondering what the impact's going to be in August when this actually does halve. Do we run up until then, and then we pull back as a result of sort of buy the rumor, sell the news? Or does this thing outright double right after the halving and just jump right up?
I don't know. Tough call. I don't know. I kind of like the run up. But not so much rumor. It's not really buying the rumor. So you're buying the news. And then selling the fact, I guess. I don't know. I don't know. It's going to be interesting. I definitely have a little, I have a small bag of it, so I'm going to be holding it for these reasons. So we'll see how it goes.
Hey, that's exactly what I said. I said the exact same thing. Listen, pay attention, people. Just pay attention. All right, here's another article I want to bring up, because this one is actually somewhat serious. And again, I think that people need to pay really close attention. Now, I will first say I applaud the engineer, Sean, for coming out and disclosing exactly what happened. And if you go to this article, it's in Crypto Globe. If you go down to this article, he gives an actual event timeline of everything that happened, which is very informative as to what was going on. So I'll belabor the point. I'm showing you the whole thing. The point is this. This guy got $100,000 stolen from him out of Coinbase because he was using SMS as a two-factor authentication. People, please do not use SMS as two-factor authentication. This is why people SIM swap people, because if they can get your phone number ported to another phone, they've got your life. And most people will put every account on that phone number. So they've got your email, they've got your bank accounts, they've got your, your Coinbase account, they've got probably your stock. I mean, they got your life. So it just doesn't make sense. So I definitely support the fact that you should not use SMS, use Google Authenticator or Authy. I resist the fact that there are people out there still today, 10 years later, still using SMS. Doesn't make sense, Brian.
Absolutely not. What was the guy's name again?
His name is Sean Kunze.
Okay. Sean, I like I said, I support you for coming out and doing this, but I kind of resist that. Come on, dude.
He's a big
SMS.
engineer.
I mean, seriously. I'm not even an engineer, and I'd be afraid to do it that way. But I don't know. But thanks for bringing it out. So anybody that is using SMS currently, read this article and don't do it anymore.
Right. There you go. Exactly. So I tell you what, I think that we might be ready to bring on our guests. Let me get them invited to the show, and we're going to get this thing on the road and have some fun.
Right.
If you haven't heard of iTrustCapital, these guys are pretty solid. It's going to be fun talking to them. So I got them invited. Let's see if they're able to jump on. And in the meantime, I don't know if Bobby's article that he had was about the supply cut. We'll see Bitcoin price rise further. Brian Kelly predicted. Did you see that article?
Yeah, and that kind of goes with the halvening that I was talking about. You know, when the supply reduces.
Yeah.
I mean, that's the whole gist of why people are wanting to hold Bitcoin going forward, is for that reason. It's a deflationary type item versus the inflationary inflate or die society we live in. So that supply reduction with only 21 million out there on the halvening is just supply demand. Supply goes down, more demand for people that want it, price goes up. So
Yep.
no, so it kind of ties into what I was talking about with accumulation phases, and I think right now we're in one of those.
Yeah.
And even on dips, we'll be in a reaccumulation phase.
Yep. Now, and again, while we're waiting on those guys to join, there's another thing that came up, and I was going to get your thoughts on this, and I was going to do it during the TA section, but I'll ask it now since we got a little time. There was an article that came out, and it said, like, basically, we're not out of the woods until Bitcoin reaches 20,000 for us to go back to 1,000. Did you see that?
Are you talking about hyperwave?
No, this is not hyperwave at all. Let me see if I can pull it up real fast.
Because I know according to hyperwave, it can go all the way back to almost the high and still crash to 1,000 and still be right.
Exactly.
So that's when you said that, that's the first thing that came to my mind. I don't know.
Yeah, well, when I first read it, that's what I was thinking too, was the whole hyperwave thing. But this particular article, and I'll pop it back up on the screen so we can sort of look at it. That's not what that wasn't the case at all. Here we go. Pop that in. Bring it up on the screen. And it's got a hand raised. Boom. So this article right here says, until Bitcoin moves above 20,000, BTC at 1,000 is still possible. They did talk about the bet that was made with hyperwave and saying the fact that they lost or whatever. But right here it says, as Fundstrat Tom Lee noted in a recent tweet, BTC rebounded by 1,800 off the Bitstamp crash, the misery index passing 89, growth in on-chain transactions and volumes in Bitcoin chart forming a golden cross are just some of the reasons why crypto winter is over. But that was him talking about it was over. I thought that was him referring to the $1,000. Let me see if I can get to the part where it talked about that. There it is. Why Bitcoin could still see 1,000. And I guess they were referring to the hyperwave.
Yeah, it's the hyperwave they're talking about. Because I mean, that's the only thing in the TA world that would even consider something like that before it actually has an inflection point where you go from an overall bearish market to an overall, bullish market. It just depends on how you attack it. I don't think it needs to go that high to let us know that it's in a bull market. But markets are markets. It can go to 21,000 and still go to 1,000.
Right.
So I don't know what that 20,000 really means. Just because it makes a new high doesn't mean it can't make a new low. I would highly doubt it if it got up to that high, because I feel like the buying support levels would be much, much higher coming on retracements. But so I think it had to do with the hyperwave.
Okay. Yeah. No. And is there a reason why it has to be 20,000 before?
Well, the whole I'm not super familiar with hyperwave, but I know that once you're in the phase 7, basically once you're started phase 7, it needs to retrace all the way back down to phase 1. And phase 1, I think, was around the 1800 or so. And if it makes a new high over 20,000, over that 19,000, if it makes a new high, that phase 7, then the hyperwave didn't work.
Gotcha.
So if it makes a new high, it throws the phase 7 out.
Oh, okay. Yeah.
But as long as it doesn't make a new high, they're still in phase 7.
Gotcha. No,
for my limited hyperwave knowledge, but hopefully I'm right. If I'm not, Socrates will let me know.
I'm sure he will.
Or Tyler or Leah, one of the three.
Cool. Well, hey, those guys still aren't in. So if you want to do the shout out, I think now is a great time for us to give a nice shout out to someone who's really cool.
Yeah. I wanted to, I mean, we were talking about it yesterday. Jacob Canfield is our shout out for this week. Let me pull up something here. Let me share my screen. Don't look at the chart yet. That's coming later.
That's right.
Couple of things. Like I've been in the field for 15 plus years, almost 20 years. Actually, at the place I'm working at right now, my 15-year anniversary is tomorrow. And I actually took the day off. Took the day off on my 15-year anniversary. But one of the things is, being someone that's been doing TA for a long time, there's not very many people I follow. Like when it comes to like finding other TA out there, I'm not trying to sound weird or anything, but I really don't need a lot of other inputs from what I've already know what to do. But there's a couple of them out there that I follow, and one of them is Jacob Canfield. It's him and a couple other guys that approach the market a little bit differently than I do, and they really, really know their stuff. And one of the things that you should join is the Trading Education Telegram. There's 1,200 people in there, and basically, I mean, if you could read it here on the side, it says, in here we mostly focus on education in regards to trading. So there's a lot of people in here throwing things back and forth that you can really learn a lot from. I actually like to follow Jacob because, for one, he knows his stuff. I mean, he does this for a living. He's good at it. So I highly recommend, following him on Twitter. His trading view is awesome. If you go follow his trading view account and get on his Telegram account too. And it's just a good place for education, and you learn a lot. I don't throw these kind of things out lightly when I say I follow these people, because this is, this is an expert asking another expert to say, hey, what's going on in this market? And if his stuff's validating my algorithms and the things that I'm looking at, that makes me a lot more comfortable, going out into the market. So follow Jacob Canfield. That's our shout out for today.
Awesome. Yes, Jacob is awesome. I remember back when he bought all those lottery tickets, and I forget why.
Oh, that was a marketing genius.
He is. It was wild, man. I actually advised Alan not to do it, but he did it, and it turned out to be a great deal. So he's a smart man. Cool.
Yeah,
all right, I think we got Morgan and Blake. I think they joined us. Hey guys, welcome.
Hey guys.
Hey, what's up? Where are you guys located? What's behind you there?
That's a road, traffic, some buildings.
That's beautiful Ventura Boulevard in Southern California.
Oh, so you're in LA. Okay, I got you. I saw Hollywood Bowl there, so I was taking a guess, but
Bowl.
I'm not too far from here.
Okay.
Exactly. Well, hey guys, thanks for coming on. We really appreciate it. Every week we try to bring a guest on, just so we can just toss ideas around, toss topics around, talk about things, discuss things. So we don't want to get too heavy in discussions on things, but we do like to talk about the market, what's going on, and from our point of view, if we support or resist whatever the topic is that we're talking about. And so we can always just keep that light. We don't have to dig too heavy and deep into it. But for those that are watching, if you haven't heard of iTrustCapital, these are the super brains and genius behind iTrustCapital. Morgan is the co-founder and chief strategy officer for iTrustCapital. I think he can get into his background a lot more than I can on the things that he's done to get him to this point, which I think is really cool. And I think you guys are going to enjoy hearing what he's been up to. And then we've got Blake with iTrust as well. And he's a chief operating officer. So both of these guys together are building a company that I think everyone should pay attention to and should know what's going on. So with that said, I'm gonna let you guys sort of do a little intro of yourselves, and then we'll start talking about some of the few of the questions.
All right. Well, thank you. Yeah, this is Morgan Steckler here. So I've been in the retirement account arena for about 17 years. In 2012, I got introduced to Bitcoin when I was working at a company helping about 10,000 clients in precious metals. I got so enthralled with the new form of money as having a background in Forex and PMs that I dug deep and left that firm, joined another, and became one of the founders of the first company in the space to offer cryptos within an IRA. I was there about a year and a half, and I left to start the second company in the space where we kind of expanded the holdings and worked more on the compliance. There, ironically, about a year and a half before I left, and with Blake and our other founder, Todd, we started iTrust. And the whole purpose of iTrust was to do this in the vision of what I always envisioned, blockchain and helping the masses. Those previous companies, worked more with a sales rep kind of model where you have a boiler room, if you will, higher fees and one-time charges, and it never really was in line with what we morally wanted to do. So iTrust was born, and with what we're building, our platform that's about to launch, this is the gateway to help people with the best possible way of moving into crypto.
Yeah, I mean, you pretty much covered most of it there. So I come from, I met Morgan when he was at that company. I was running the sales side of a gold company, and that industry just was going in the direction, not a great direction. But I have a good understanding of the IRAs, alternative investments, and this guy got me into crypto a couple of years ago, and we became friends, and eventually started iTrustCapital with a goal of making it simple and easy for anyone to invest in these investments in a very transparent, fair in terms of cost way, taking all the good of cryptocurrency and physical gold, which is another asset we do have on our platform, but doing it in a way that actually truly benefits the customers, and so that they can see the growth and not have the majority of or big part of their funds go into the pockets of the owners of the companies that they're working with.
Awesome.
Yeah,
very cool.
Yeah, when I brought this up that you guys were going to be on tonight on the show at work where I'm at, a lot of people were curious. Like they're saying you can do that. You can put Bitcoin in an IRA or those kind of things, and they were very interested in it. I didn't know much about it when it comes to Bitcoin and getting into IRAs. That's why it's great that you guys are on here. So I definitely have at least 4 or 5 people that are going to watch the replay of this. So explain away tonight so we can get a little bit details of how this goes, because a lot of people are concerned, future, when it comes to 401k and not having a choice to put other things, other assets, those kind of things. So I think it's a good thing to have you guys on here. So.
Yeah, and just so everyone can be clear, because this is such a new area, these guys, we can't really get too much into certain questions because of regulatory reasons and things like that. So some of the questions we might ask, maybe they might not be able to fully answer them due to that. So we'll try and move around these questions so that so we can still be able to make sure that you understand what's going on when it comes to this topic, but at the same time, we don't want to get these guys in trouble, right?
Thank you, Paul. Thank you for saying that.
Yeah.
Yeah, no, this is more for information.
Yeah. Yeah, and that's the disclaimer that we put out there to everybody. Listen, folks, do your own due diligence. You have to go work with your financial advisors and work with your lawyers. Things that we're saying here is we're just trying to enlighten everyone and at least raise awareness that gets you guys thinking. So with that, I just want to go ahead and just start by talking about something that I think brings this topic up. And from you guys' perspective, listen, I think a lot of at least the economists out there are talking about the fact that we've been in this long bull run, right? And the fact that there's like this 100-year debt super cycle that's out there. You know, if we are running toward an economic collapse, and that's a big if, we don't know if it'll happen, if when it would happen, but if that's the case, how do you guys sort of what do you guys see as far as what people, the positions that they're in right now, whether they're close to retirement or that they're far from retirement? Is it sort of the same thing they should be thinking, or what do you guys think? And let me ask you this, forget about the other people. What are you guys thinking when you're looking at us facing an economic collapse? Put it that way.
So that's a good question, and a dicey one there a little bit, because we don't want to tell people that we think that's going to happen or what to do. But I find it interesting what I'm seeing right now from people that are much smarter than I am when it comes to forecasting markets and understanding them. Travis Kling comes to mind from Ikigai, if you guys know him. A lot of the stuff he's talking about lately, it reminds me of the conversations from 10 years ago, and even 5 years ago, before Bitcoin and crypto really had made its move, when they talked about gold as a safe haven. And I think that conversation starts coming up a lot more, that maybe not all of crypto, but Bitcoin certainly is starting to really make a claim that it is the new modern gold, and a place that will work, looks like possibly inversely to these markets, to traditional markets. And if that's the case, which it has a lot of the same fundamental values of that gold does. It's limited in its availability. It's even more limited than gold, because we know exactly how many will ever be created. It's actually better in a lot of ways, because it's a lot more portable. It's much more liquid in most cases. So I'm starting to read a lot of articles by a lot of people, and I'm like, well, this sounds like they're about to tell us to buy gold, but then it goes into Bitcoin, because Bitcoin does have a lot of those elements and better in some ways. And if you look at it, what's happening in Venezuela and other parts of the world where they are suffering from a collapse in many ways, Bitcoin and cryptocurrencies are doing extremely well. Premiums are rising; they're at all-time highs in many of these places, because it gives an asset that's outside of the realm of the government and their financial system. That does seem to be a place they're going for protection.
Yeah, and if you take, and Blake said it was well said. I mean, if you look at the forms of what money is, it's fungible, exchangeable, transferable, transportable. It has a store of value in and of itself. Bitcoin meets all of those requirements, and the portability is obviously a lot more attractive than carrying around a bag or even pounds of gold with you. It's going to be interesting in terms of forecasting, things like that. We don't have a crystal ball, but you could definitely see that we're overdue for a recession, at least in my personal opinion. And we're going to probably see something with the stock market crash, in the near future. Whether that's Q3, Q4. I personally might think that before an election, something might be happening. But I know when this next recession does hit in the stock market, gold is always a haven, but it will also be the first time that cryptocurrency exists in a recession. So I'm going to be very curious to see what the correlation will be of what's going to happen, because you now have this new worldwide form of real money that's existing when you're going to see that recession hit, whenever that may be.
I agree. I'm on the same page with you guys, and it's interesting that both Blake, you, and Morgan brought up the whole idea about gold, because that was one of the things. Because I know that you guys also have a gold solution, and you can probably comment on that with this next question. But as you know, Barry Silbert's come out with this enormous campaign, which I think is amazing. This Drop Gold campaign. Granted, it's so that he can push GBTC. And again, rightfully so. Right? Listen, Barry Silbert has been he's got his fingers in every crypto company I think exists. But what I find interesting about that is if people, and I don't think he really intends for people to literally drop gold. It's just, and he said this himself, it's to start the conversation. And that's the great thing about this, is to start the conversation about what options people have out there. So when you guys look at gold and you look at Bitcoin? Are you guys of the mindset it's one or the other, or you think both of them are safe havens?
Yeah, I mean, I think it's a great conversation, and it's worth having the conversation. I don't think gold is going anywhere anytime soon. It's still going to have its place. Certainly, from a volatility standpoint, it hasn't really done much of anything, so it's been pretty steady, I guess. So our goal is not to make that decision one or the other. I personally own both. I own physical gold.
Me too.
I also own cryptocurrency. So I don't think it's that. It's a fun kind of conversation starter. Certainly got some attention. I get it. It makes sense to have the conversation, but I still think both have its place for the foreseeable future.
Well, yeah, it's like pieces of a pie. I mean, you know, you always have different pieces of a pie. Having a proper slice, I mean, that's good financial balancing for one's future. So having your allocations, you don't have to overextend. At the end of the day, it's whatever one wants to do, aggressively or conservatively. But I'm right there with Blake, and obviously you. You know, I have both holdings, and I like to be prepared, you know, for my family.
Yeah, and again, I just think it's smart that people are at least thinking about this, because they're not. So with iTrust, we know that you guys have made it possible to put digital assets into an IRA or 401k, but you guys also have a gold solution. Can you talk to that a little bit? Because I'm still a little unclear as to the gold component.
Yeah, so this one's going to take a little time in terms of educating the public. So, you know, you have gold paper products like ETFs, which like GLD, you may be familiar with. There's mining stocks. There's all these different paper ways, but there's a whole you know, community out there that they don't want to own paper gold. That kind of defeats the concept there. They want the physical gold. So there is companies, I've worked with them, that sell physical gold in IRAs. The problem with that is many. One is most of them their goal is to sell coins that are very overpriced, which make them not a great investment, even though the core gold concept is a good idea. Two, it's not very liquid. You have to talk to somebody on the phone during normal business hours, and hopefully they'll buy it, but they don't have to. And three, you know, just the time that it takes to transact and to do these kinds of processes, it takes weeks sometimes to get things pushed all the way through. So that kind of sets up what we're offering, which is not our own product. And again, you know, what we are is a platform to find these great products and offer them in a simple way to our customers. But there's a company called DG, Dillon Gage. They've been around for 40 years. They're one of the largest gold refineries and wholesalers in the world. They've created a product called DG Gold. So what DG Gold is physical gold at the Royal Canadian Mint, bullion, big bars, okay? So it's the real gold. It's audited, unlike GLD, so you know it's actually there. And they've created a way to own it on a blockchain. So it's not tokenized. There's not always a need to tokenize everything. So with this, it's just ledgered. It's owned on the blockchain. And through our portal, you'll be able to buy and sell it up to a
thousandth of an ounce.
Thousandth of an ounce to buy and sell real physical gold at the lowest fees. I think even if you're going to walk into a coin shop and buy a little bar, I think we still have them beat because we're only doing it at 1%, and their spread is only $10 per ounce. So it's I mean
$30 over spot.
It's not even the total difference between a buy and sell for physical gold is about as low as you're ever going to find it. And it's compliant to go into an IRA. It is actually deliverable. Again, you know, that would be a distribution, but the point of saying it's deliverable is to say it actually is there. Try to get your GLD delivered to you.
Well, GLD
it's not going to happen.
Yeah, and ETFs are, you know, I'm not a fan of ETFs. Like the GLD.
Yeah, we could go on a whole show on ETFs.
Contracts, and if they called in those contracts, there's not enough gold in existence of mine right now. It would take 7 more years, I think, of current mining just to meet the contracts.
If 5% of people ask for their gold, it's completely bankrupt.
Yeah.
It's over.
And you get controlled by the bigger pieces. Yeah, you don't want to get into ETFs. But,
yeah. so you're saying the bid and ask spread is about $30?
Yeah, if you take the total combined from what they're charging, and then we're taking their cost, and we have a 1% transaction fee. That's it. So 1% on the buy and sell. Okay. But even if you add a total round trip, it works out to about with spot gold at call it $1,300. It's a round trip of about $30, which is if you walk into a gold anywhere to buy an eagle or a bar, you know, you might be able to buy a bar for $20 over spot. When you go to sell it,
60,
you're not going to get spot. You get under. So as a total spread per ounce, it's extremely competitive. And And so and that's really, if you're going to buy gold, that's the only type of gold you should be buying, just this raw form. It's a hedge. It's going to move with spot, and the closer to spot you can buy and sell it, the better.
Yeah, and I think I read on your website the storage at the Canadian Mint is free.
Correct. Yeah. So
You
part
can
of that,
store it for free. Okay.
yeah, it's stored for free and insured through Lloyd's of London. Unlike cryptocurrency right now, which is a little more of a challenge in the insurance space, we all know that. Gold, this gold isn't going anywhere. I don't think it costs, the policies for them are pretty cheap. You've got the mint of a country guarded by a lot of guns and soldiers, and it's very heavy to move. And so I don't think it's quite on the same realm. Hopefully the insurance products and crypto will get to that level, which it is moving in that direction. But yeah, it's in terms of cost basis to own this stuff, I've never seen any more cost effective way to do it.
I agree.
And speed. If you want to sell your physical gold bar, even if you have possession, you've got to go to the coin shop or wherever your local place is, and then we'll see what they give you. With this gold, the gold market runs 24 hours a day, 5 days a week. So as long as that market is open, we're open. You can click buy and sell and buy 24 hours a day, instant liquidity with your metals, and you'll always know what you can get for it. It'll always serve up a price through our platform.
And that's the one difference of the different tabs that we have currently on the platform. The crypto is 24/7. The gold is only 24/5. So that crypto markets never close. So that's the only difference between the two. It's even at the same spreads. Yeah,
that's awesome. So Brian, you had a couple?
Yeah, actually, my one question is, I mean, I've been a gold fan for a long time. So when cryptos came out, of course I jumped on it because it made complete sense to me. But one of the things is my question. I'm going to read it here because I got a little color to it. The world of crypto is relatively young, and the government is just getting started on how they are going to deal with the new technology. If I was to just buy my own Bitcoin and hold it on my own in my own wallet over time, and I have the freedom to do what I want with it and take it wherever I want, anywhere in the world. One fear I see with the new products, and I'm not trying to put it down because I think it's a great idea to do, but one of my fears is the government coming out with some type of regulation that says, hey, we can't do this anymore. And then all of a sudden the Bitcoin that I have locked up in an IRA is all of a sudden taxed or not taxed or taken away. I go back to history of when they started ripping everybody's gold back from them.
The 1932 Federal Reserve Act.
I had a feeling that's where you were going.
But I mean, not to say that will happen, and I know you guys don't have the correct answer or have any idea what the government can do, but that's just one of my fears. So I didn't know if you had any light to shine in this area, or am I just paranoid?
Maybe a little bit of both, but that's okay. We're really familiar with the 33 Act and the confiscation, and you have to go back to why they did it. They didn't do it because they saw gold as a threat. They did it because they needed to devalue. The country was broke and needed to devalue the dollar, and they took the gold, and they actually gave people currency for the gold. The gold at the time was $20 an ounce. They got $20 per ounce. So it wasn't like you lose it and get nothing in that situation. And that's the only time in history that I'm aware of that the government, I mean, other than like eminent domain when they want to go over your house. But they do pay market value for these things, and it's pretty rare. So can it happen? Sure. If at some point Bitcoin is just too powerful and the dollar is basically turning to nothing, and they decide these assets are a threat to the dollar, okay, I can go with that and make that argument. And they say you can no longer have a Bitcoin in your IRA. Okay, I think it's a stretch, but let's just say they do that. You're going to be able to liquidate back to US dollars because that's what they want you in anyways. So you liquidate at whatever the market is, and you're still inside of an IRA. IRAs are a government regulated, and they designed these things in the 70s. They're under a tax shelter. So if you liquidate, if you had to for any reason, maybe you've made too much money and it's just time to liquidate. But you can always liquidate back into dollars. So I don't think that they would do a confiscation, even if they come down with really harsh regulations. And if I don't see them being able to ban it. But if they do, okay.
And it would take just 2 clicks. I mean, because you would just immediately click, you log in, you click, it turns back into fiat. It's sitting there, and you can sit there in cash. So you can change it out. Like, that's part of this 24/7.
Yeah, no, that makes complete sense. I mean, the paranoia side would be them to say, hey,
there's a lot of paranoia that, you know, especially with gold. I mean, a lot of people
I think the government is as ruthless as government agencies can be. I don't think we're at a point where they're just going to take something and say, you know, tough luck.
Yeah.
It'll be.
You made a good point. They would want you. They want you in fiat. That's where their control's at. So they would want it back there because they want the money flow. Right. So that makes complete sense to me.
Yeah. Plus, they can create more fiat with a click of a mouse. So giving you 10,000 cash dollars for a Bitcoin or 50,000 per Bitcoin, what do they care?
Yeah, they make 80 billion every more dollars a month. I mean,
Exactly. They'll give me my $10,000 here in about 10 years so I can buy a hamburger.
Exactly.
You know,
I just wanted to say on taxes. So the real benefit, obviously, you know, the argument that you don't have as much control over it as if you're holding yourself, that's accurate. But the nice thing is you get to take the tax advantages of that IRA. So if it's a Roth, it's growing tax free. If it's a traditional, it's tax deferred. And for a lot of people, taxes is coming up a lot lately in crypto, and there's some pretty nasty stories of situations, and the IRS definitely, you can expect they're going to be looking at crypto a lot more.
Taxes. I mean, there's a reason why that's same.
Yeah, so it gives them that shelter, it gives people the shelter, and for people that already have accounts, it allows them to keep the tax benefits of their 401ks and IRAs, but now invest in these products.
Meaning it's not a taxable event every time you want to buy and sell. Unlike if you're doing this on the cash side, when you're doing it on the cash side, you have to keep track of what alts you're buying, where you bought them, how you transferred, the ups and downs. I mean, good luck. That's why there's a lot of companies out there that are literally out there just to try and help people with that.
Yeah,
you don't need to worry about that when you're doing it in an IRA. Like, you can trade as much as you want, and you don't need to keep track of that stuff.
That's an absolute plus, because it's annoying as all get out doing the taxes. My taxes this past year was 86 pages long with my trading.
Ooh.
So
I don't mean to laugh.
No. I mean, laugh because it's absolutely ridiculous, but that's just the way it is at the moment. But maybe they'll change it. Maybe they won't. Maybe they'll make it a like kind exchange. Maybe, I don't know. I doubt it, but we'll see.
Maybe other people have a lot on their plate too. Every day there's always a bunch of stuff. So you know, they're aware, but there's a laundry list of things they got to be working on.
Yeah, sure. Exactly. My other question is, you talked about it when you guys were doing your introductions about morality and fees. And that's one of the things that I get questions about when I bring that kind of stuff up. Like, say, hey, I'm gonna be talking to these guys about IRAs and stuff, and the first thing that people think of is fees. So one of my main reasons I jumped into Bitcoin and other cryptos is the freedom to be my own bank, and to get away from being feed to death with like a traditional bank, the way they function today. How could the crypto industry go about creating a new type of product that does not mirror the same fee saturation banking that we see today? And I think that's what you guys are probably trying to do, is not mirror the traditional type banking fee system, because the way you introduced morality and fees make it last, those kind of things. So help me out there. What do you say?
I'd be happy to. So there's still fees from what exists today, prior to our company coming on board to do something similar to ours. There are companies that have been offering it, and it's in writing. We have their fee schedules. To pay 10 to 15% on a single transaction is the norm up until this point. So we are doing all trades at 1%. Is that still a fee? Is there still cost? Yeah, but we're doing our best to drive it down. There's also a one-time onboarding fee with our company of $299, regardless of account size. There's some storage with Ledger Vault to have that security level, and then there's just a standard IRA maintenance fee of $15 per month. So there are some fees, and I get the conversation. We're taking what exists now, knocking it by over 90%. Right off the start, and over time, obviously the goal is to drive it down as much as possible. But being that it is new technology, and some of it still needs to mature, the cost basis are still a little higher than we would like. Case in point, look at the gold storage. Gold, I mean, Dylan Gage can cover gold storage and insurance all with only a $10 per ounce spread, and they're still making a profit in there somehow. I mean, that's a pretty tight margin if anyone then understands gold. With cryptocurrency, because it's all so new, the costs are higher. Ledger Vault, they're building out their platform and security. So always with new technology, the costs start off higher, and as it matures and there's more competition, generally you drive it down. But we do have fees. The nice thing with our company that we're proud of is you can go right to our homepage, click on fees, and you'll see every fee that we charge, clear as day. You don't have to have an account. You don't have to talk to a salesperson who's going to determine what he wants to charge you, which is standard for a lot of companies. So we're putting it all out there and doing the best we can. And if we can drive those costs down over time, we will.
Yep.
Cool. Yeah, because when I went out to the website, it looked like that was the case. And now that you guys are saying that, because I didn't know if there was any other fees that were beyond what I read.
There's nothing to hide. We're proud of this. If you
that's cool.
Those other companies, you're not going to get a hold of them. Like that, we're proud of this.
Here's something I always tell people, not just in this business, but anything. If you go to a company's website, that its goal is to sell you something, a service, a product, and you can't easily find what it's going to cost, you're going to pay too much.
Good point. Good point.
No matter what it is.
Yeah.
Or if you have to talk to a salesperson, you're going to pay more than you should.
Yeah. I wonder how many people realize that they're paying almost a 2% management fee when they buy GBTC.
There's another case.
Yeah.
They probably don't even know it until they're like, what? Where'd all my money go?
Your broker does the same thing. I mean, there's a lot of that.
Yeah. So I like the transparency. Awesome. Thanks, guys.
When I was at Consensus, I actually brought this up to the folks at the Grayscale booth. And again, I might be looking at this different or whatever, but here's the way I look at GBTC. So GBTC, let's just say, I don't even know what price it is right now. Say $7. Say I buy GBTC at
I'll
$7.
buy it at $7.
Me too. Right now.
Whatever the price, I don't know the price is GBTC. But say you buy it, and then let's just say you hold it for a period of time and you sell it. Does the premium even matter?
So good question. I'm ready. I'm ready when you're.
Yeah, it's like the premium doesn't matter. I don't think the premium matters if someone's just buying and selling. The way the lady explained to me that was at the booth, she was talking about, like, I guess, larger type clients that's buying a lot more for companies, hedge funds, things like that. I guess that's when this whole premium thing comes into place. Or if you're buying it, I guess, not like through a broker and you're buying it through them directly or something like that, then I think the premium matters. But for an individual that's going on to E-Trade and they're buying GBTC and then they're going to sell GBTC, I'm not sure how much that premium matters over if they would have bought actual Bitcoin and sold actual Bitcoin, but I don't know.
It could. The answer is it could. It could actually even possibly benefit. So the premium moves independently of the price of Bitcoin. So that's a more supply and demand fundamental. So for example, I remember when Bitcoin was, mooning at almost $20,000. Well, GBTC, if I remember correctly, I remember seeing it at about $38 or $39, which is just about a 100% premium. Meaning, if for every, what is it, 1/10, whatever the number is, like for example, today GBTC I think is like just at $10 and Bitcoin's at 75. So that there's your premium, but the premium can fluctuate just like Bitcoin. So here's where it didn't work out. People who bought GBTC when Bitcoin peaked paid 100% premium. And then because of demand, everybody wanted it. It drove up the premium. But then as Bitcoin crashed, everybody sold off. And not only did Bitcoin go down, 85%?
A little bit,
Mm-hmm.
yeah.
The premium, about 80% of that premium got sucked out. So people in GBTC lost a heck of a lot more than a person who just bought a Bitcoin at 20,000. Right now, the other side can be said too. Maybe you buy it when the premium's really low and the premium increases, and it is possible to benefit from it. But that premium fluctuates, and it's not always on a one-for-one basis with the movement of Bitcoin.
Gotcha. Okay. No, I guess that's making a little bit more sense to me. But yeah, I mean, it's a neat tool that they have out there. And again, for those people that want to get exposure to Bitcoin in a retirement account, super easy. Buying GBTC might be the way for them. With that being said, and I know that I've tried to talk to people about this, specifically traders, people that are trading on a daily basis, they need to be inside of something like an iTrustCapital, right? Because they're doing all these trades, making all this short-term gains. They're going to have a ridiculous tax bill at the end of the year, right?
Yeah, I mean, that to me is the core. I think we solve 4 key problems with iTrust, but the number one is the taxable situation for anybody who not even day trades. If you don't hold a position for 1 year, you're in a short-term capital gain situation. That's taxed as ordinary income. So anyone who likes to make buys and sell, swing traders, I mean, you don't have to be somebody staring at your screen all day buying 10 times. If you buy a couple times a month, or you just wait for spikes, peaks and valleys, I mean, we get them in this market. It's great if you're able to take advantage. The downside is if you're doing it outside of an IRA, that tax, you're supposed to report that. And if you haven't, the IRS is coming. And if you're doing really well and you're in a very high tax bracket, well, what's the highest tax bracket? Federal bracket's 37%, I believe. In addition, if you're in a state that has state taxes, that's income tax as well. In the beautiful state of California, I think we're up to 13%. So we're talking about a 50% tax rate on short-term capital gains if you're at the upper levels. Now, you do the exact same moves in an IRA, there's no taxable event. You're not paying taxes until you pull money out down the road.
Yeah.
But the beauty is if you have to pay 20, 30, 50% of your gains every year, that means your next year you're starting off in a bit of a hole. You got to dig yourself out and then grow. If you do it in an IRA, your gains are all there rolling into the next year for more gains rolling into next year. Think compounding interest.
Exactly. Compounding gains.
Compounding gains in an IRA until you pull out. With a traditional account, you pay income tax when you pull it out. Let's try to keep it till you're 59.5 to avoid penalties. But for those who have done a Roth, can do a Roth, that's post-tax dollars going in, 100% tax-free coming out as long as you wait till 59.5.
So for those believers in someone like Bitcoin, imagine where it hypothetically can be. We don't have a crystal ball. Could it be 0? Could it be 1 million? Who knows? But if you take a small bit of your IRA and you put it into a Roth and you're buying it here at 7,500, call it, imagine where it may be in 10 years.
20, 30 years.
20, 30 years. That's all yours. I mean,
yeah.
That's the benefit we're trying to provide.
Yeah.
Right. And so for both the person that's trading or for those who really believe in Bitcoin, thinking that Bitcoin's going to moon and go to 100,000, if you're, again, hypothetically, let's say you own Bitcoin and you bought Bitcoin and you're holding it at, the $7,000, $8,000 range, 100,000, that's, $93,000 profit. Tax-free. That's unbelievable. And so I don't know if people are, if that's sinking into the minds and souls of people, but they've got to pay attention to this. And this is why I got excited about you guys' products, because I think that this gives people. Now, with that said, how much can I move over into an IRA though? What gives me the ability to shift over? Say a person, you got a lot of Bitcoin, you're one of these OGs, right? And you want to move a lot of that over. How can you move that over?
So if you mean move over your Bitcoin into an IRA, unfortunately you cannot.
There you
cannot fund an IRA with Bitcoin yet. Maybe.
Sort of like you're doing what you can't fund it with gold. I mean, physical gold bar.
You can't. Now, we'll back up. If it's already in an IRA somehow, because you paid too much at another IRA provider a couple of years ago, you can transfer that in as an in-kind contribution. And in fact, we've already been taking some calls from people that are at other companies, some of which have folded. Others which they found us and they want to move it over, so we can accommodate those people.
So we can move holdings that are in an IRA. That's IRA to IRA in-kind transfer. But you can't start an IRA and put your cryptos in there. You'd have to start with fiat.
And let's touch on one more thing. So if you have an existing IRA, 401k, 403b, all these other retirement accounts, most of the time you can convert that over into an IRA, no issues. And then yearly, you have contribution amounts that you're allowed to make. For 2019, if you're under 50, you can contribute $6,000. If you're over 50, $7,000 to an IRA. So you can transfer, you can contribute, you can do both. There's quite a few options.
Well, get that. Then people need to flip $7,000 over quick and get almost 1 Bitcoin.
There you go.
Before it goes up, right?
That's right.
At least everyone should have at least one, in my opinion. I mean. You have a halving next year. Most of it's already, already out there. A few million of it is already disappeared forever. So the supply is a lot smaller than people realize. So as more people come in, there's not enough for everybody. You know,
Oh yeah, no, I tell
But-
everybody if it's within your means, get one. Just get one.
Right, and you think about that, what you just said is really genius, and I hadn't even thought about this. Listen, and again, I have to make that disclaimer again, not giving financial advice. Go talk to your financial advisor. But to me, it makes sense that if I'm someone that has $7,000 in a retirement account, buy one Bitcoin, shift that money over into iTrust, buy that Bitcoin and hold it. If you do nothing more than that, to me, I think you're set. So if someone was to do something like that, I think that makes sense. And that's the way they have to do it, right? You have to have cash, fiat in your retirement account. You have to roll that over into you guys, right?
Or you can start a brand new IRA if you don't have an IRA or any retirement plan. If you had a job, you worked at a job and you had maybe a matching plan, that 401k, when you left, that's sitting there, and you can roll a portion of that. You don't have to roll all of it. You can take whatever amount you want and roll that portion into the IRA iTrust platform. So it's very simple to do that. You don't have to go all in. We're not telling you to do that. It's your choice, whatever you want to do. But yeah, there's not, like you said, owning one Bitcoin. I like having a Bitcoin. So
yeah. And then for those who qualify for a Roth to open a new one, of which there's some now, their government has gotten involved. So there's going to be rules. So there's some income levels that you have to be below to open up a new Roth with new money.
Yeah.
I think it's about 130,000 if you're single, and like 2 something if you're married. But the point is for somebody who's going to buy that Bitcoin anyways, they're going to take their 7,000, they're going to buy that Bitcoin and put it in their Ledger Nano, whatever. Do the exact same thing. You've already paid taxes on that money that you're going to buy it with. Just put it into a Roth, and now those gains are tax free. Whereas when you put it on your Nano, and it goes to 100,000 hypothetically, and you sell it, that differential, that 93,000, that's taxable. Now, if it's held for more than a year, it's capital gains, and the cap is 21%. So it's better than short term, but it's still taxable. You do it in a Roth and you sell it from there once you hit that age, you get to keep it legally 100%. That's your money.
It's one of the greatest gifts that we got by living here in the United States. And there's a reason why that 1% of the 1% are that top bracket, because they've parlayed the benefits of retirement accounts and the ins and outs to their advantage. We're just trying to spread that message to the masses, with your help, with everybody's help. We want to spread this message. Everyone who believes in this and who is not aware needs to be aware. Like, we're here to help people. That's why iTrust is here.
Because, and again, going on the comments from those that are definitely probably a lot more intelligent than I am, but Mark Yusko said it, even Peter Schiff has said it. Listen, a lot of these guys, I know Max Kaiser said it, Trace Mayer said it, all of these folks have said 1 to 5%, right? 1 to 5%. Even our friend at CNBC, Mr. Brian Kelly, said 1 to 5%, just said that the other day, 1 to 5%. Put it in listen, at a minimum right now, and I think it was who was it? He said, it was one of the Winklevoss twins, said at this point, it's actually crazier not to be in Bitcoin than to be in Bitcoin. So if people don't have some exposure, it doesn't make sense. It's like you gotta have some exposure. And this is a great tool to have some exposure, because even if you, let's just say, play with it and you put, $7,000, get one Bitcoin, put it in there and walk away and leave it, having it secured on a Ledger Nano, right? That it's going to be safe and secured in the vault. No one's going to hack it. No one's going to steal it. No one's going to Binance you, right? So the point is that, it just, it's no brainer. No brainer.
Agreed. Well said.
We think so too.
Yeah, I'm glad you guys done it. Yeah, I can only imagine it's very difficult to do this, and trying to educate the public is a tough thing to do, to get people's minds wrapped around this. But again, for those that are in the crypto community that are traders, guys, you got to pay attention. I think that this is a winner for you. And so for you not to even consider it is a little crazy. So you can definitely do that. Brian, do you want to talk about the charts a little bit and what's going on?
Yeah, I sure can do that. Let me
So at this point in the show, guys, we always like to get Brian. So by the way, I don't know if I introduce you guys to Brian, but Brian is actually a certified financial technician. He does this as a day job. He is actually certified, probably one of the only in the crypto community that can do this from a certified perspective.
Yeah, the adult in the room, as you like to call me. All right. I know I've been on. I know there's a lot. There's a lot of lines on this chart, but this is a continuation from what I talked about last week. But one of the things I put this out on Twitter to say, I still think it's going to 10K before it goes back down to 7K, and I wanted to give the reasons why on here. So bear with me because there's a little bit on here. First of all, one of the main levels that I've been paying attention to, I put on this little blue arrow right here, and this one is the 233 exponential moving average right here. That was really good support in the market. So you had a lot of buyers that were holding that line before the sellers, actually gained some strength and busted through to the downside. And then we got that 3,100 low in Bitcoin. So this is a key point right in this level. It broke, kind of testing this trend line here, this blue trend line, this bearish trend line. And then it broke the moving average to the downside. So that's a key point. So what I did was if you draw over this level right here, it's right around 6,300. That's a pretty significant level going forward that I'm watching. But I don't right now, with the way the indicators are showing, all the momentum indicators and trend stuff that I follow. Right now, they're not giving any sign that that it's going to drop back down all the way to the 6,300 level at this point in time. So, couple other things here. I'm watching this trend line here going to the upside, and then also I like to look at this. These just previous highs. I got a whole bunch of horizontal lines here on these previous highs. This level here is another one to watch. Which we had that little tick down the other day where it dropped pretty hard and then it popped right back up. Kind of tested that area a little bit. Not exact, but it was definitely an area of buying interest to pop this market back to the upside. The next high here is another level that I'm watching. And if I blow this up, and kind of look at this a little closer, a couple of things that I'm looking at here is if you look at this level here, this 7,200 is a 61.8% level, relatively close to the significant high of history. So this whole area in here around 7,300 is going to be an area of buying interest. It actually came down the other day, and if you're looking at some other Fibonacci levels, that $7,500 level was another area that should find support first, which I'm glad it did, because that we're actually starting to bounce off of that today, which is exactly what I wanted to happen. So that's what's helping me validate a move to the upside. Couple of things. This is the ADX indicator under here. The black line is the ADX itself. It measures the momentum of trend. And when the green positive directional index is above the red, which is the negative directional index, the green positive or the positive directional index says that the bulls are in control. So right now the bulls are, even though the price is coming down, the bulls are still maintaining control of the internal trend. So there's still strength in buying on dips. So basically, it's the indicators giving you the sentiment that you should be buying on dips right now. Another thing is I'm not going to go into whole detail here on the RSI, but the RSI is a relative strength index, gives you a little bit of overbought, oversold conditions. I look at it for bullish and bearish zones. We did get a little bit of overbought here, and then it came back down. But one of the things is this RSI is dropping back down into this bullish zone. And when I say bullish zone, it's really ever since we started this bull run to the upside. It's been in this zone here, and it's also maintaining its own support on the times when the price is dropping to the downside. So that's another indication that the sentiment is buying on dips. Now, when I'm a Fibonacci guy, so one thing I'm watching here is if you take this high right here and this low, we've already retraced to this high. So the 61.8% would have been right around in this area. So now what I'm looking at, just going over to the next high, which is right around 9,800. And if you take the Fibonacci on this from the previous low, you're already right here. The Fibonacci line is right around the 7,300, which is around this previous high, which is also, we had that real quick dip down, but the market came right back up and found buying interest back above that 7,300 level. So theory behind this is I like to look at it as trench warfare on any of these lines, like the 61.8% or trend lines or anything like that, where right now the 61.8% had sellers on it, but then it popped to the upside. But now the buyers own this line and they want to hold this line. And the indicators are helping us say that the buyers are gathering up more and more around this 7,300 level. So if you were a seller and you really want to sell this thing longer term, usually want to wait for a move all the way back to the full retracement, which is the 100% level. So anytime it breaks the 61.8% right here, the full move is all the way back up to 9,800. So that's where I'm saying there's a lot of buying interest in this market well before we get to the 7,000 level, to where I think, it can dip down, but I think it's going to find those buyers and keep this trend line going to the upside. And we see 9,800 or 10K as it moves to the next side. Now going forward, if it gets all the way up to this 10K level, you go to the next high here and you got another Fibonacci line, which ends up being the high that's already been tested. So that's another thing of why I think if we get above this 8,400, we're going to 10K pretty easily. And then you also bring in the next high of 13,000 as another level. So these are these levels that I'm watching. And as long as the internal indicators are showing buying interest and the bulls are still in control with trend, then, you got to ride that trend to the upside. Now, this is broad market. I'm not saying that we should be trading in and out based on this indication, but the broad market is buying on dips and going forward. So I know there's a lot on this chart. If you go back a couple videos on our channel, I go through it really deeply on all the different levels. If you really want to get into it that way, to give a lot more explanation on why I'm getting these numbers. But the gist is right now I'm still liking the broad market of seeing that 10K before 7K. Now, if we get down to 7K and it breaks this 7,200 level, then that's when this break point right here. This was an inflection point to where the sellers took over. But then again, once we broke back above this line, the buyers are taking back over. So this 6,400, if we get back below 7,000, I think we can drop to that 6,400. But I think it's going to take a lot for us to break 6,400 to the downside at this point in the game. So there's my quick chart overview. Hopefully you got something out of it. But if not, contact me on Twitter. I'll be happy to answer any of your questions.
So what is your prediction that for this next week then, based on that?
For right now, I still think consolidation until I start to see, because let me pull this back up here. And the reason I'm saying consolidation is the ADX here has been dropping. Even though the bulls are in control, the ADX is losing a little bit of momentum. So, but it's not changing to where the bears are in control. So to me, it's going to consolidate between that 7,000 and 8,400 range. Just like I said last week, even though we got that little quick dip over a major crash there off of a big sell, it popped right back up to that range that I thought it would stay in. And I still think that range, I mean, you could almost say 7,200 to 8,400, stay in that range. Now, if the momentum starts to build as we approach 8,400 for the bulls, and then it breaks the 8,400 with a background of some momentum behind it, then we're going to 10K over the next couple of weeks. But right now I'm going to stick with consolidation for this. If you're looking at it just for the next week.
Right.
Yeah.
Well, one of the things you said in this article I just put up on the screen, it's important because what you just said about that top, whatever that fib was, that was around 13 or whatever. Tom Lee, and he said this, this is back on April 4th, that Tom Lee said the fair value of Bitcoin was 14,000 right now. So that was, a couple months ago that he made that statement, and he talked about it being at 14. And it's interesting that back then the Bitcoin price was nowhere where it is now, not even close, wasn't even anybody's imagination. And he made this call back then on the 4th of April. So it'll be interesting to see if we're actually gonna, get to that level.
Yeah, he definitely made that call a little quite early. I didn't make the call until May 9th, May 11th, which is not too long ago.
Right.
when I said it was going to 10K and that, you know, that kind of thing. But in April, I don't know what he was looking at, but I know he's got a lot more than just technicals. I'm just looking at a lot of different indicators and measuring that behavior in the market. And that was a big inflection point when it busted that 6,400.
Yep, that's true. So, I mean, again, I don't look at technicals. I don't do that. But again, I think that for my next week, so by the time we're on the show again next week, I'm actually agreeing with you. I think that we very well are going to go to that $10,000 mark.
Yeah.
And why? And the reason I say that, though, is if you look at it, this run just won't quit. Every time it pulls back, it pops right back up. And it reminds me of, and I don't have specific time frames, but back when we were having those parabolic runs, you would see that. You would see the market pull back, and all of a sudden it would just rocket right back up again. And what news or what event will it be to cause that? I'm not sure, but I got a feeling that we will, in fact, pass that 8,000 mark, probably past 84, and then, like you said, after that, we're going to see some really long green candles that's just going to push us right up to that 10,000 level before we see any other particular pullback. Now, after that, who knows what happened? Will it pull back down to that 84 level and find support there? And then, before you know it, we really are back off into this bull run, massive parabolic deal? Possibly, but that's my call.
Yep. Yeah, let me show you something else real quick. Just to get a little bit of a different time frame. This is the 4 hour. We've been talking about this too, because a lot of people were talking about the inverse head and shoulders and all that to break this area. This was, when I was talking about that dip that we saw down in the market right here, we popped right back up to this, and kind of stayed above this level, the 7,200, and then we've been moving up, and then we've been in this consolidation, and now, this is where I'm getting that 7,200 to 8,400 range that we're in, because right now, if you look at it on the 4 hour, there's no momentum on the near term to really get us going out of this range, and that's why I think over the next week, it could stay in this range. But when you start to click over to into the 8 hour, you can start to see the bulls starting to get a little bit more control. So it's there, but it's not there yet. So in other words, if you're looking daily and weekly on, the trend's there. It's just taking a little bit of maybe some more positive news or some other people to kind of come in and get those hourlies going again. But right now, and then if you click it over to the 12 hour, you can see the bulls are in control on the 12 hour. So, you always got to step back, look forward, see what's going on. But broad market it's keeping the sentiment buying on dips. So I'm going to stick to that until the indicators tell me otherwise. So
good.
Yep.
I don't know if you guys got any questions for Ryan as far as technicals, if you want to know anything or not, but more than welcome to ask.
No, you covered it very well. It's valuable to have somebody who actually knows what they're talking about explain how these charts work.
Yeah, it really is.
So when it dips down, get $7,000, flip it over to iTrust, and get going.
There you go.
That'd be smart.
Yeah, so with that, again, can you guys please tell people where they can find you and what's the best way of staying in the loop of what's going on with you guys and what you guys are providing?
So for now, just go to iTrustCapital.com. Plug in an email address right there on the homepage. One little click, you're on our list to receive our updates and news about launch date and so forth. As we get closer and closer, more emails will be coming. And once we have a solid date, I'm sure we'll have a lot of people that want to get the process started to roll funds over, because that does take some time. It can take anywhere from a few days, but up to several weeks, depending on where it's coming from. We've already got a few, more than a few. We've got a decent amount already in process. But again, we don't have that solid launch date yet. But once we do, we're happy to start onboarding people and get the process going. But yeah, just an email at iTrustCapital.com, and we'll keep you in the loop. And
so, awesome. Can someone use your platform right now, though, or do they have to wait before you guys have the launch?
It's still a little bit of a wait. It's not live. You can kind of see what it's going to look like, but no, it's tentatively a few weeks to a month and a half-ish. Couple of small hurdles to get over before we can go live.
Okay, awesome. That's
good deal.
Awesome, guys. Well, thank you so much for coming on. We really appreciate it. Hey, folks, that's going to be our show. Hey, if you know where to follow us, of course, Brian is Fibbo Swanee on Twitter. I'm _crypto curator, and our friend Bobby Atkins. I don't even know what Bobby's handle is. Do you know what his is?
It's Wolfpack Crypto.
There you go, Wolfpack Crypto. So there you go. So follow us there. Keep up with everything that's going on. And hey, we'll see you guys again next week on Thursday. Take it easy.
Thanks
Thanks for joining, guys.
You're welcome.
Thank you.